From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming April 26th Forex session. Pair in front of you is the CAD yen, and the Canadian dollar yen pair isn't necessarily the first one people look for, but with the Bank of Japan undoubtedly moving to weaken the yen on Friday via an expansion of the bond buyback program, which people are anticipating at least 5 trillion yen, perhaps more, the yen should weaken over time. While many people will look at the dollar yen first, there are a couple different reasons why I like this pair right now. Number one, the dollar CAD pair broke through the bottom of a consolidation move this session on Wednesday, which shows Canadian dollar strength. The yen, of course, will more than likely weaken against most currencies. So, in this scenario, I like the fact that we are pairing up a currency that's strengthening, the Canadian dollar, with one that is being actively worked against, the Japanese yen. There's also, and it does take a little bit of artistic license to show this, there's also the argument that we could perhaps be seeing a bit of a flag pattern breaking higher. It may or may not be true. There's a little sketchiness on the pole, but regardless, when I redraw this, you can definitely see, without a doubt, there is a little bit of a downtrend channel that has been broken. So either way, it is a bullish signal. Of course, Friday will be the fireworks, and if we get some type of surprise out of the Bank of Japan, then we could see a pretty accelerated move. I think that the 85 level is a natural place for this to go right off the bat. The 200-day moving average and the 80 handle are both underneath the pattern, so it is supportive regardless. But of course, we want to have a little tighter stops than that. This hammer, though, is a good place to look for support. If we break the bottom of that hammer, I'd be a little more concerned, perhaps maybe looking for a pullback to 80 to see what happens at that point. Compounding this is the U.S. Federal Reserve. And the reason I say this is the fact that during the Wednesday session, they said nothing about quantitative easing in the statement. However, they did suggest in the news conference, Dr. Bernanke at least suggested that if the economy needed it, then the Fed would be willing to do things to ease, which of course shouldn't come as any surprise, as they are defenders of the economy. However, it does suggest that quantitative easing isn't completely off the table, and if that were to happen, then commodities would rise, which of course is a pro-CAD move anyways. So we have several things working at one time, and it does look like perhaps we are starting to break out. So a break higher of the session highs would be positive for me, and I would expect we would move towards 85 and perhaps higher. As far as selling this pair is concerned, I wouldn't even consider it until we were sub 80 and below the 200-day moving average, which looks relatively unlikely at this point.